Welcome back to Brashonomics. I'm Ben Brashin, and we're going to talk a little bit of mortgage, and you know who joins me in the mortgage arena, Mr. Ryan Leopold, and Marianne Fordyce was happy enough, and we are lucky enough to have her stick around for a few more of her comments. How you doing, Ryan?
I'm doing great, Ben. How you doing, buddy?
I'm good. You still doing well over there, Marianne?
I am.
All right. When you start getting into these real estate markets, a lender tends to be a big part of the transaction. And, we see it more and more, Ryan, on the mortgage side because it takes a certain amount of time to close a loan. There's a lot of different facets of it going on simultaneously. What causes, I suppose, people to pair? What is some good advice on people picking the right lender? What are the choices that they have? And what are maybe the pros and cons of both? And, both of you guys, I'd love to get your opinions.
Yeah, from my perspective, I think the biggest challenge the consumer faces is where do they find good, not only good professionals in this area in general, but how do you find a good lender, especially if you've never been through the process? You kind of don't know what to really look for. Okay, so I think getting referrals from friends and family is always a great start. And also referrals from other industry professionals. So a lot of cases, people work with their real estate agent first as they go through the process, and then they kind of get through the lending process. So really listen to your real estate agents. They're always going to have great relationships with lenders because a lot of them have been in the business forever, and they've kind of known who the good lenders are and who the bad lenders are, and they'll steer you in the right direction. So I think that's always a great start.
Yeah, I think that's true. We were talking before this, and you were asking me how I prepare my clients, and basically I prepare them by first getting them into a lender. And we talk about lenders, and basically they oftentimes come to me with having approached their personal bank. And now I'm not knocking any banks.
I am.
But we do have our prejudices. And there are they'll tell me which bank, and I'll give them my perspective on it. And so they do ask us about that, and we do let them know what the difference is between a bank and a mortgage company. And from a real estate perspective, from my perspective, I think that going to a mortgage company and going to a good one is important because you have many more choices, and most buyers want choices. They want the best rates, obviously, and that's where they're going to get them.
When somebody asks, Marianne, when somebody asks you, or brings a pre-approval letter from a bank or something you don't like, and what are some causes for concern that you express to your clients?
The rates and maybe the quality of the process. In this kind of market, especially when things are really, really fast and really, really tight, you want them to be with somebody who's going to get the job done. And when I get offers on listings, too, I make sure I'm aware of what that lender is so that I know that the job's going to get done. And there are lenders out there that I know it won't get done. Or I also know with a buyer where the rates are not so good, and they'll quote a rate on the pre-approval letter, and I'll go, well, you might want to talk to a mortgage broker, and then I give them recommendations. And so that's how that works.
Yeah, and I would say, and I've been in the business for, 14 years. I've worked with a lot of different lenders. I've worked at a couple different mortgage companies, and I've worked at mortgage banks before. So I think there is definitely a distinct difference of the level of kind of control that your loan officer is going to have when it comes to working at a mortgage company versus a bank. It's amazing. You'd think that big banks actually should make the process easier because they've been doing loans and mortgages forever. And in reality, it's just like any other big government or big business. The levels and the bureaucracy get in the way of making logical, fast decisions. Okay. And when you're in a competitive market like we're in today, you need that flexibility of being able to prioritize things and get things done in a timely fashion, because that's when you're going to lose. That's when you're going to lose contracts. If you've been a buyer in the market and you've been trying to find a home for 9 months and you finally find the perfect home,
Yep.
you're pre-approved and everything's good to go, but yet the lender or the lending institution drops the ball in any phase of the process.
Yep.
That could cost you that house and that contract. And in an appreciating market like this, it takes, if you don't close in that 30 to 40 day window, the seller
huge.
could actually maybe walk because they know they have leverage.
Absolutely. The seller has all the leverage right now. So you really have to go with that. And I think that the other thing is, I know that if I'm working with Ryan, that he's a mortgage company, or there's a mortgage company behind him, and I know that he doesn't just work 9 to 5 and Monday through Friday. I know that on a weekend I can call one of his team members and, right, Ryan?
Mm-hmm.
And I can call one of his team members. If it were
We
a
have my app
bank,
now. You can call me right from the app.
right. That's right. And if I couldn't do that, that could lead into me not getting the house, and that means my client not getting the house, because I cannot produce a pre-approval letter. And if I don't know that agent, they don't, that's just the way it's going to be. It'll go to the next person because there's a lot of people lined up. That's why going to one is really important. Having that process in place is really important with a really well-known, good mortgage company.
Yeah, and off that too, again, being in the business for as long as I have, and I know even at good mortgage companies, they have less than stellar professionals or mortgage professionals to help a client out.
Yes.
So really get in there and working with good, professional, experienced, educated lenders who really have the best interests of the client at heart and really have a proactive approach to things.
Yes.
In this market, I think, is another key factor. So if somebody says, oh, I'm working with so-and-so mortgage company or so-and-so bank, it really is about the loan officer they work with and creating that relationship that's going to create the best success for that buyer.
Absolutely. And that mortgage broker having a good relationship with that agent, because that's how the process gets done. That absolutely is true.
Talk a little bit about what that relationship with a lender and an agent looks like in order to be successful.
So from my perspective, which I've said, gosh, especially over the last 3 or 4 years, as lending standards have gotten tighter and tighter, and as we've had these unique fluctuations in the housing market in general, that I think now more than it probably has ever been, from my perspective, is that a lender and the real estate community need to come together and work as a team without a doubt, to work for the best interest of that client, to get things done efficiently and on time. Really now more than ever.
Absolutely. I mean, I think any market, I need to know that that mortgage person knows his business or her business and has it in place. I know I hand my clients over to them, that they are taking care of them, that I don't need to worry about it because I'm really busy right now, and they need to be taken care of that part of it. And I also, in years past, I would sit down with my clients. I pre-qualify them, and I could do all of that. But now the lending practices are so different. I try not to get into it with them because the programs change almost every day. And that's why they need somebody who really is very, very, very experienced and very knowledgeable.
Yeah, the days of of really understanding both sides of the business more than kind of at the surface level are gone. It used to be a real estate agent may be able to be your loan officer, but now with such an ever-changing real estate market, the different parts of negotiation that might get a deal done, and then you couple that with the intricacies of the current mortgage market, that really is two very different professions, and a lot of people maybe don't understand or don't see the difference.
Right.
Because it's all for the same property. People think they're financing a house, but really the loan is to an individual and the house is collateral. I mean, there's so many different pieces to this puzzle.
It's so complicated compared to 28 years ago when I started. I mean, it used to be so easy. I just take my little calculator and boom, done. But not anymore.
Yeah.
And just little nuances on the particular loans are so different, and they change. And I can't keep up with that profession. That's why they need to be with somebody good.
It really is crazy. Like last night I was talking to a client, and on paper, they're easy.
Yeah.
Way more than 20% down, perfect credit, but they've really only actually been in the States and a citizen for about 24 months, but really have only created income in the States for about 17 to 18 months. and their credit has only been established for about 24 months, which really took a while to build up to that. So on paper, it's perfect. But when I was talking to him, I'm like, oh, I really need to see everything to make sure we do a thorough analysis. So he said, let's get together as soon as possible. Let's get together tomorrow. Let's take a look at everything and run this through an underwriter. That way you really, truly are pre-approved, and we have every T crossed and every I dotted to make sure we're going to be okay.
I know, because I think that's really true, is that people are surprised when they when the lender is questioning them. And I just say, it's not about that lender. It's about what's happening in the world and how strict it is now. And you just need to answer those questions. But people are shocked. And I've been shocked sometimes when I know the people and I know they're qualified, and then they're questioned about things that, what? So...
And the best advice I give to anybody on the lending side is know that most loans, let's say 85 to 90% of all loans are all done in the same bucket, this Fannie Mae, Freddie Mac, FHA, VA bucket, meaning everyone offers the same stuff.
Yeah.
So whether it's us, Bank of America, Wells Fargo, Community Bank, Credit Union, the guidelines and the stuff that lenders need is going to be the same for everybody. So really, really, really get a lender what they need up front to assure you have a real, true pre-approval.
Absolutely.
Yeah, Ryan, Leopold, and Marianne Fordyce join us. Guys, we have about a minute left. Is there any other big parts of that relationship people should look for between an agent and a lender?
Between an agent and a lender? I think the biggest thing is I think... Truly, it is about the lender and the agent being on the same page and really knowing each other, and us having a communication with what's happening, and that they are experienced.
I think the confidence that comes with that as well. It's okay because, Marianne, as you mentioned earlier, and we do have to go to break, but you mentioned earlier, a lot of times you're helping people manage their emotions through a tumultuous process.
Right.
And the loan side could be scary because sometimes... when you put a loan through underwriting, nothing's wrong. It just takes 5 days. Well, 5 days and, not knowing that it's 4 days, 3 days, 2 days doesn't always satisfy the emotional needs of a borrower or buyer.
Exactly. And you need to keep them calm through that. And you want your lender to keep them calm through that, too, and not panic about small things.
Keeping calm through the storm. Guys, thanks so much for joining us. We do have to go to break. When we come back, Sean Perry will continue the conversation with us about what's going on in the real estate market and how inventory is affecting sellers. We'll be right back after this break.